Hello and welcome to Joy Reap Daily News. My name is Nick and here's the news today. China's nickel and stainless steel giant Tsingshan Holding Group has started production at its $1 billion steel plant in central Zimbabwe, a company official said on Thursday. Tsingshan Iron and Steel Company will produce 600,000 metric tons of carbon steel annually during the first phase of its operation, Project Director Wilfred Mossi told reporters during a tour of the plant. Essar Group is waiting a final approval to start investing about $4.5 billion in the building of a low-carbon steel plant in Saudi Arabia, its top official person Ruya said. The approval are expected anytime now, after which the conglomerate will start working on a 4 million ton per year steel plant, along with the port facilities at Ras Al Khaimah at Saudi Arabia. We still haven't got all the final approvals, Ruya, the director of Essar Capital, which manages the group portfolio of investment, said in an interview with the PTI. The plant will meet domestic steel demand in Saudi Arabia. Until the Chinese government introduces more robust stimulus packages to counter the soft economic data and exporter in the world's second largest economy ease off on flooding global markets with copper. Prices of the base metal, crucial for power lines and AI data centers, are expected to remain under pressure. The latest custom data from Bloomberg shows that the Chinese export of unwrought copper and other products in May doubled from last year to roughly 150,000 tons, exceeding the previous high in 2012. This comes as copper prices hit a record of high more than $5.10 per pound on COMEX. In late May, copper hit a record of $5.10 per pound as traders panicked and bought the red metal on the next AI trade theme, primarily because of a tightening supplies and rising demand from electric vehicles, AI data centers, reshoring, and power grid upgrade. In other words, Chinese exporters have been exporting the deflation via the red metal as domestic economic activity remains in a slump. Two key figures in the aluminum industry, Kun Pei-kyong from Malaysia and Song Jiwon from China, are intensifying their partnership through a significant ownership exchange. This deal involves Kun Pressed Metal Aluminum Holdings trading its 25% stake in Bintang Alumina Indonesia for 25.6% stake in Song's Nasan Aluminum International Holdings. Following this exchange, Nasan Aluminum plans to spin off the list independently on Hong Kong Stock Exchange to raise funds for expansion. Pressed Metal initially acquired a stake in Bintang Alumina 4 years ago to secure steady alumina supply for its smelting operation. Currently, the Nasan Aluminum owns 72% indirect interest in Bintang Alumina, which operates a large alumina plant in Indonesia. Shandong Nasan, the parent company, had announced a $6 billion investment to expand this plant by 2028 to meet the rising aluminum demand. Brazilian mining company Vale plans to invest $3.3 billion to increase copper and nickel production capacity in Brazil and Canada, Bloomberg reported. This investment, spread over the next 4 years, aims to significantly boost output, particularly of copper, by 2028. The company aims to expand the copper production capacity to approximately 500,000 tons by 2028. The target is set to be achieved primarily through the enhancement at the Salvo and Sossego mines in Brazil. Last year, Vale's copper production stood at 321,000 tons, indicating a substantial planned increase. Nickel production is also set to benefit from the planned capacity lift. Vale Base Metal Board Chairman Mark Tiffany unveiled a comprehensive plan that encompasses a multi-billion-dollar capital expenditure. China Yahua Industrial Group has secured a new agreement to supply lithium carbonate to Tesla from 2025 to 2027, with an option to extend for another year. This deal complements an existing contract where Yahua supplies 63,000 to 88,000 tons of lithium hydroxide to Tesla from 2021 to 2025, valued at $880 million, which was established last year to cover 301,000 tons. By the end of 2023, Yahua had delivered lithium products worth 5.8 billion yuan, about $800 million to Tesla. Yahua, primarily a manufacturer of industrial explosives, has significant involvement in the EV battery sector and was among the first in China to produce the lithium hydroxide. The company has partnership with major battery makers such as Contemporary Apex Technology Limited, LG, and SK On, and investment in global lithium mining projects, including Zimbabwe's carbonate mines, and offtake agreement with Sigma and Pilbara Minerals. And here's the news today. Thank you so much for listening.